Now that we've covered the basics of conventional loans, FHA loans, VA loans, and USDA loans, we are now going to take a deeper look into all of these. We're going to be taking a look at the similarities and differences of these, and in this video, we're going to talk about specifically the eligibility. Let's get right on into it. First off, we have our conventional loans. The requirements on eligibility for conventional loans are mainly made up of your financial portfolio, such as your debt-to-income ratio, your down payment, your credit score, and these we will be discussing in future videos to come. Next, we have FHA loans. Much like conventional loans, we still take a look at specific down payments and credit scores. However, there's additional eligibility factors as well. First off, the home you consider must be appraised by an FHA-approved appraiser. FHA loans are only applicable to primary residencies. Thus, if you're looking at a second home or investment home, you cannot use an FHA loan product for that. Third, the property must be occupied within 60 days of closing. Fourth, it is mandatory that an inspection must occur. Lastly, there are some income requirements by area, so make sure to check with your local lender to know your eligibility. Moving on to VA loans. Not all who served in the armed forces are eligible for a VA loan. There are some specific eligibility requirements, so here they are. A, you've served 181 days of active service during peacetime. B, you've served 90 consecutive days of active service during wartime. C, you've served 6 or more years with the National Guard or Reserves, or 90 days under Title 32, with at least 30 of those days being consecutive. In addition to those requirements, if you are a spouse of a service member who lost their life in line of duty, or as a result of service-connected disability, may also be eligible. For more guidelines on eligibility, it is all on the Veteran Affairs website. Finally, we have USDA loans. For USDA loans, the eligibility is based on living in an eligible rural area, which is outlined on the USDA loan website. You must also be a U.S. resident, and your gross income must not exceed 115% of the median income in that area. Now that we talked about the eligibility for each of these 4 products, we're going to move on into the down payment requirements in our next video. See you then. Make sure to work with a trusted lender who can tell you about your eligibility and your specific situation.